What is up, everybody? Logan here again with another video coming right at you. I'm joined by Halcyon again today. If you guys could leave a like, a comment, and subscribe on this video before we get right into it, I would appreciate that greatly. Today, we've been running a play in the Discord that we grabbed on Friday, and it's a long Condor on Airbnb. So we have Halcyon here to break it down for us. How are you doing today, my man?
Doing well. So we've I think you and I went bullish on Airbnb maybe 2 or 3 weeks ago.
Yeah, 2 weeks.
Yeah, we got a leap on this and we were selling premium against it, which has been working out great. I think we're on week 3 of that. That's probably up 10 or 15% at this point. So I'm just going to walk through the setup because I think a long Condor is a bit different than what most people typically do. They're usually, when you're referencing condors, people are thinking they're doing iron condors, which of course is a selling premium strategy. Long condor is a debit strategy that gives us a lot of interesting ways to manage our trade. So you can do bullish or bearish versions of them. And in this case, we're doing a bullish version on Airbnb. And so I'm just going to walk through the kind of the setup we looked for, what we saw, and then we'll talk through how we decided to create it and what it actually looks like. What are the components of a long condor in Thinkorswim here? So we put this on last Friday, late in the day on Friday. We called it out to everybody in the Discord and then threw this play on. So what we're looking at here, this is a chart of Airbnb for all the data that's available. Obviously, it was a new issue back in what the IPO was December last year. Yeah, I feel like it was the beginning of this year, but I guess it was December. Either way, whatever. And so it's been obviously it's COVID land and all the stuff of them dealing with that. And, they've been kind of basically trending down since that high made on 2/19/94 back in February. It's basically been trending down. So what Logan and I were looking for is when we got back into our kind of buy zones, which for us is around this dotted blue line or dotted green line, is the buy zones for this, which is why we started picking up, some long calls on this, some leaps, so some very long dated calls, and then sold premium to bring our costs down to that. However, one of my favorite signals that I like is called the squeeze, the TTM squeeze, which is where you can, this is on toss. I'm pretty sure Tasty has this, TradingView has it. I'm not sure about Robinhood if he was a technicals there, but it's this little icon down here, this little indicator set down here, and tends to be a pretty powerful signal. Essentially, is looking at momentum and is it going to break out one way or another. I like to pair that with the RSI, which is this bottom indicator. And for me, I use it as when it's above 50, it's bullish, below 50, it's bearish. And I try to avoid being long positions whenever we're in the red below 50, which is why I have this indicator designed to go red whenever you're below 50. The other way I like to see it is when it starts trending up, right? You can see it trending up here, even if price is going more sideways. This gives me an indication that we're having some divergence to the positive side of things, and that is probably going to break out. So we want to take advantage of this. Typically, a squeeze is about 7 days. Each position will have a little bit different by which their personality interacts with the squeeze. But on average, most stocks about 7 days. Thus, we said, how do we want to play this position? And then knowing me is I hate being negative theta. I don't like doing naked calls or puts unless I have like a 5-star perfect setup. This is not a 5-star perfect setup for me. It's good. It's probably a 4-star, but it's not warranted enough for me to go long calls or long puts because I'm missing the element of being above the long-term moving averages. But it's close. So instead we said, well, let's look doing how do we do maybe a cheaper way to get long in this, and I can have positive theta. So that's where the long condor comes into play. So we're going to flip over. And then again, this is the 2-year. I like to view things with a 2-year daily for these setups. If you look back, we'll go over to the other 2 time frames that I like to look at with this. Here's the 4-hour. You notice the 4-hour looks pretty similar, right? So we're pushing long, and we're looking like another one's going to happen here too. Push long as well. And then here's the 195, 180 day actually. So same kind of setup, looking like it wants to be bullish and keep pushing a little bit further here. The targets I was looking at was around 160 in this next week or two. So the thought process was, let's go ahead and get a bullish play on this, which we did on Friday, to see if we can maybe push into that 155 to 160-ish range. Now, again, my mean is 162. My long-term moving average is 161. So I'm expecting that to be a bit of a, slow it down, a bit of a problem.
Mm-hmm.
If it does clear it, we'll look at going all the way up to about 185 for Airbnb. So this is what the actual play looks like. So we'll head over to the Analyze tab. And here's what the Condor looks like, the shape of this. All right, but I do think it's helpful to break this down into its components, which is going to give you a little more clarity how it works. So the blue line is what your profit will be, or your loss will be at expiration. This particular trade, we threw it out for 30 cents. So it was a 30 cents debit. So $300 on 10. That's the max you can lose is $300. Now the most you can make is a little over 2,000. Okay, so if you're doing your math here, you're getting close to a 7-to-1 from the reward to the risk side of things, which is pretty awesome.
Mm-hmm.
Plus, if you notice our purple line here, this is what our theta, our T+1 line is telling us, and it's a positive theta, meaning that I'm not paying for the right to see if this works out. I'm able to essentially watch this, and if it goes sideways, I'm not losing my shirt when it's going sideways. Now, what does a long condor look like, and what are the components? So down here is what we've got, which is going to be, for those who can't see that all that well, you've got a long contract tied to a short, so in other words, a vertical, a debit spread here. Mm-hmm. And then you have the opposite for the next two, which makes this shape. So it's sort of like you have a vertical here that you're selling, and then you have a vertical that you're buying. But because the vertical you're buying is closer to money, it's more expensive. Mm-hmm. Thus, it sort of outweighs what's happening on the top end here. Okay, again, both sides, you can't, if you blow out the other end of this thing, again, you're still capped here at what your max loss can be at $300. Just what your debit's paid. So I think it's helpful to see these things when you break them down into their individual components, and gives you a better understanding, because ultimately in option trading, we want to understand what we're doing and what we're getting into. So here's the long call, right? There's the 152.5 long call. Yep. And then we sold that 155, and thus there's your traditional vertical debit here, yep. Right? Then we added into this another short leg, and that way I'm now pulling up. I actually could make this a credit technically, but of course we then added that in. So hence we get the shape. All right, so now we have a nice positive theta, and really we just need to move into right around the 153 range, and we're going to be looking really good on this. We're already close to being up 100% in the day and some change that we've had this. Mm-hmm. But like I said, there's probably an additional 300 to 500% to get, especially if we can get this by Friday to hang out somewhere around here. So anywhere from the 155 to about 157.5 window, we're going to be looking around max profit on this. Now, what I'm more likely to do with it is I think I'm probably a week early. I mean, again, I have no problem saying that I'm a week early on something that we still got paid 100% on the debit to be in this thing. But we're up about 277 right now. We paid 300. So yeah. This morning earlier it was up 100+%. We get another push tomorrow, 1% or so. This will be looking at probably up 150 to 200% of what we paid. And then the question will be is, do we want to hold it for the rest of the week, or do I want to roll this out, take my profits, and then roll it out, and this get a freebie for next week? Mm-hmm. Some other interesting things you can do with these is, let's say like where we put this, I think price was sitting around 148 when we initially put it on. And some of the things you can do is you can also take these and sell premium against them, right? So one of the strategies I like to do, if I think it's going to be slow moving, which has not really been that case since we've been doing this, but if I think it's going to be a little bit slow moving, you can try to sell premium on this side of it, okay? And what that will do is basically take off the downside risk. So we sell a vertical here, a call credit spread. Now I'm slowly chipping away at the cost of what this trade is. You can see it tilts a little bit here, but that'd be selling the 162 and a half, 165. That means we have to go all the way through the body here, and then fly out the end over here before we actually run into problems with it. And that basically takes it and pulls out 25 cents of credit. You pay 34. Actually, I got filled at 34. We try to get filled at 30, but essentially makes it now this trade costs 11 cents to get into. So now it's 110 bucks to make whatever we end up making on this thing. And you can do obviously the opposite thing too. You can do the put credits down here if you think it's going to keep grinding up, and make sort of like this big iron condor that's a really wide iron condor that's wrapped around this thing. So you're not only pulling in premium, you're also going to get paid by the debit side of things. And it's just it's a very nice risk controlled long setup here.
Yeah.
And again, it's all driven by what our setups are. We don't take trades that, don't have a setup there. They always have to have some kind of technical reason for us to get involved with them. But right now, working great. We have tons of theta pushing. Tomorrow, I already moved this from yesterday to today, but tomorrow, this is gonna, if we keep moving up here, we can see what our profits are gonna start doing. Is tomorrow, you can see this thing just exploding on the value if we get in this range, 400, 500, 600 bucks. That's going to be a nice little 2x, 3x bagger here if we keep pushing. And ideally, this by Thursday or Friday, we're sitting in that 155 range. And we sit there and ring the register and look for the next setup, which depending on how the chart looks, like I said, I think 160 is probably going to be where we're going to get stuck for a little bit here, but it still looks bullish, and we'll still keep playing the trend until it decides to not play with us anymore that way. So that's the long condor. Ultimately, it's 4 legs, and it's just you're not selling premium, you're doing a debit in this case, and it's again really interesting way to get long a position, and have it be a way to participate with having a very controlled downside, still getting the ability to have a really healthy return on it, and just makes it a little cheaper. So, for example, we just did the debit version of this. A little more expensive for us to get into this thing, but your profit's still staying there exactly the same. In fact, you get a little less if you're in this thing for that, but it costs us more to get in. So, it's just again, you have to be a little bit, you got to make sure you're not overshooting it. But the thing is, you get paid while it's moving into this. So, worst case scenario, let's say we jump up to 156 tomorrow. We're still going to be looking at a great spot here. We'll probably can take it off for about a $600 win and call it a day.
Yep.
And then roll this thing out further to the 162 range, and get, again, it'll be a free trade at that point when you add it all together, just to see what happens with it. So there you go. That's the long condor. It's crushing for us right now. I'm expecting a little more push tomorrow. Obviously, we have FOMC coming up, and that's always wonky land. So we'll see what our lovely feds have to say about inflation and what they're expecting to do with turning, the free money spigot off, and we'll see how that affects the market. So there you go.
Yeah, man. Well, I appreciate you coming back on and chatting about this strategy. I'm super pumped to see how we totally work out with this one, when we finally call it a day on it. And I'm excited to play way more down the road, because I think it's a cool way for someone who, might only have 300 to play in a long position, and they don't want to get eaten up by theta decay and like a long call, right? And they just don't have the capital to do that. And, they want to be more conservative, make more money, and then also be more creative with their trading. I think this is a great strategy for someone like that.
Yeah, I would completely agree with that. So it's going to give the person who, like you're saying, if somebody has a smaller account, this is a nice way to make your long debits be a little bit cheaper, and give you the opportunity to, you can still participate. So even if you're wrong, even if it starts exploding past it, you just close it out and roll it forward. And you're closing it out for a win. It's not like you're closing it out for a loss.
Right.
If you're real bullish on something, you think it's going to be running for another, week or two, then keep pushing it out, take the win and push it out further. And then if you think you're going to be wrong, then you sell the credit on one side or the other to essentially cover the cost of what the trade is, which is pretty sweet, because especially if something's moving hard one direction, you should go get a lot of credit in that direction that you sell into. So
That's awesome.
it's working out.
Cool. Well, I appreciate you coming back on, man. That's going to be everything for us in this one. I hope you guys appreciated this video, like all of the ones that we put together for you guys. And that's going to be everything for us. Make sure you leave a like, comment, subscribe, and we will see you guys in the next one.